I don't understand the fundamentals. My job is just to look at the price action, just to look at the charts, and that's all I'm going to do. Some of the best trades are the ones you don't do. But being a trader is one of the most difficult jobs in the world. And if your process says to you, there is nothing to trade at the moment, then you sit on your bloody hands. Literally, whenever I do a training course, I say, who's read Market Wizards? And the men and managers always put their hands up. I just go, yeah, see, that's why he's in charge of you guys.
Welcome to this week's podcast on the trading battle. I have with me someone who's been in the financial markets as long as me, and actually we've got very similar careers. We both started on the LIFFE floor. Clive Lambert has also been one of the leading technical analysts in the UK for the last 25 years. Clive, how are you, mate? Nice to see you.
Hi, Jason. Good to see you, mate.
We basically had the same career, I would say. I mean, you started on LIFFE in 1986. Is that right?
A little bit later than that. I was a stockbroker for 3 years, and then my futures career started in Sydney, on the Sydney Futures Exchange, in fact, where I worked for a year in 89, 90, and came back to London and worked on LIFFE from 90 to, well, throughout the 90s, basically, which is where we first stumbled upon each other, I think, eh?
Indeed. Just give us a quick rundown of what you did on the LIFFE floor.
I was a broker, mostly on the short end interest rates stuff, Euromarks as they were called then, Euribor as it's called now, for Tullets for a long time. And then my last 2 years I worked for an Italian bank, Caboto, which were very active on the really rather quiet and sedate BTP pit. So nothing too stressful.
For anyone who doesn't know, the BTP was basically the craziest pit on the floor. The most volume, the most volatile, and the biggest traders were drawn to that pit because, of course, the opportunity to make huge sums of money was there. So you had to be razor sharp, whether you were a broker or a trader in that pit.
Yeah, exactly. And I was a broker. I was never actually in the trading pits. I was on the edge of the pits and would hand signal the orders, speak to the clients on the phone, hand signal the orders into the traders in the pit. And so I always thought that the brokers were more intelligent, but in hindsight, the traders made more money. So
some traders, maybe some didn't, I'm sure. But the thing is, you had to turn up all day, every day, on your feet, on the phones, and you couldn't take a break. You had to be there, focused the whole time.
Yeah, there's a lot of interest, isn't there? And you must get it as well. People asking about the floor and what was it like, and da 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 da. And I think I always say it was the ultimate work hard, play hard environment. We did both of those things to absolute extremes, if you will. As some people more than others. But and actually, because I wasn't in the trading pits, I wasn't actually that much of a face on the LIFFE floor. But
Yeah,
because
you're
I've
pretty well
stuck
known.
around, but I think because I've stuck around in the industry since, I've become a little bit more sort of well known as a futures bod, if you like, because I'm still in, and like yourself, still in the game. There's not a huge amount of people that are still knocking around the industry out of the sort of 3,000 that were down there towards the end, So that's actually during the floor, I was probably quite a quiet chap who just came in, did his work, and went home,
Well, you certainly made up for that since you are very well known in the City of London. And I know you're in the City of London a lot as well, because you've got some big corporate clients and you're up there also coaching. So when the floor shut, then you transitioned, you decided to provide a technical analysis service, and you were basically the first person to do it. What made you do that? You obviously were already into technical analysis. You didn't just wake up one day and think, right, this is where I'm going to go.
Yeah, I mean, there was 3 or 4 of people on the floor who people used to go to for the levels, and I became one of those. That sort of, I mean, I think what it was for me was, whilst I was on the floor, I used to try and make sense of the fundamentals and phone my clients every day with something sensible to say about, the market. That we've got CPI numbers coming out at 9:30, and if it's above here, then the market should do this. If it's below there, the market should do the opposite. Blah blah blah. And then and I think one of my light bulb moment was one of those times where the market had been bullish for weeks, and a number came out that was a bearish number, and the market went up more. And I just went, well, what's the story here? And I think I spoke to, I don't know, Ackers or someone, one of the old sages, Tony Laporte or Ackers, one of those type of characters, and said, "What's going on here? Like that was such a bearish number. The market's still going up, and the market doesn't want to go down, does it?" And that was a bit of a light bulb moment for me, where I thought, well, instead of worrying about why the market should be going up or down, why not just look at the price action, and that is the chart, right? And so I got into charts, and and then as things have gone on in the last 25 years, I just made a point of being the chart guy, and only the chart guy. My client base now is pretty much all energy traders, oil and gas and carbon and power, and markets like that. And as you say, all sort of large corporates and that kind of thing. And I've set my stall out to say, look, I really don't know anything about your markets at all. I don't understand the fundamentals of gas. I'm not a meteor. Yeah. Most of the fundamentals in gas is to do with things like, well, weather, basically, geopolitics, and tanker movements and stuff like that comes into it as well. Weather's a big part of it. But I just sort of said, no, do you know what? My job for you is just to look at the price action, just to look at the charts, and that's all I'm going to do. And it's all works quite well, because then they've got this pure kind of unfettered sort of view of what the chart says and nothing else. And that's kind of, I've set my stall out like that, and I think there is a testament to technical analysis as a craft, if you like, that I've been able to sort of traverse asset classes with these skills that I've developed over the years, and yeah, so that's sort of where I put myself these days, and a kid who left school at 16 hasn't got a most of my clients who got top class degrees at top class unis and places like that, but for some reason they still like to listen to what I've got to say, what I put out every day with respect to what price actions say, and that's what I do. That's all I do.
Well, you're an expert. You have been doing it 25 years. They can't argue with that. And actually, that
The
that is,
10,000 hours.
you've definitely done that. Um, and I like your approach, actually. It's too much to try to combine fundamentals with technicals. I certainly find that. Of course, we all know what's going on in our markets. I'm sure you can't avoid it. I'm sure you do have a basic understanding of what's going on in the energy markets. As you said, you've proven that technicals do actually work, because your levels do work consistently, time after time, day after day. And if you've got corporates paying you to provide that, there's got to be a lot of value in what you do.
Yeah, I hope so. Long may it continue. But yeah, I mean, a lot people, I've been asked in the past, "What's your track record?" Show me your track record, and I say I don't keep a track record, but I've got clients, large oil companies that have been clients of mine for 10 years. I've reading my stuff for 10, 15 years now. There's for me, that's sort of enough of a thing to say, that yeah, and I don't have a huge amount of contact with my clients, but as long as they pay their bill every year, I know they're happy and everything's going all right.
Yeah. So, like me, I guess you deliver your reports pretty early in the morning before your customers are at their desks. How does it work?
Yeah, exactly that. And just got a template that we work from, and yeah, just put out every day what my thoughts are. One probably interesting sort of difference, if you like, but you may have experienced this over the years, is that professional clients generally aren't so, they're not so worried if you get it wrong. They kind of want you to get. I've made some shocking calls at times, and your pro clients will just there. Sometimes I've had emails from clients going, "Don't worry about it. Just if you fall off horse, get back on. Keep doing what you're doing. You're never going to make good calls all the time," which is exactly what trading is. You have to trade it. I think that's what a lot of maybe people new to trading find so difficult, is this whole, is the idea of losing money or losing trades, and being able to sort of, to frame that and to not let it affect your, what's going on up there kind of thing.
Well, the fact that you do put your balls on the line every day and say, I think this is what's going to happen. I think this is where it's going to go. I think this is the level where you get in. I think this is the level. This is my target. You know, you are opening yourself up to criticism. So I think people respect that. Your clients obviously do, and they know that your track record speaks for itself. As a trader, if you've got a 65% win rate, you're doing pretty well. And I would imagine that your analysis is probably more accurate than that.
Yeah, I've done some analysis on the analysis in the past and sort of, how close, were we a tick away or 10 ticks away from levels on so different, depending on the market. And yeah, they're fairly, they stick fairly well. So yeah, I mean, I remember a conversation I had probably over 10 years ago with a prop trading client in Dublin. I think I did a competition on the reports. I put a song title in the reports, and in one of the reports, and I went, if anyone can give me the original artist, the artist who originally wrote this, performed this song, I'll send you a bottle of champagne. And one of my clients in Dublin got it right, and he said, don't bother buying a bottle of champagne. Just get on a plane, come over here, and I'll buy you a beer. And I was like, yeah, all right. So went out with, spent the afternoon in their offices, and then went out in the evening with a bunch of their traders. And one of their traders was talking to me, and he was going, oh, I absolutely love your levels. They're so spot on. If you've got 10 as support in the Bund, then I'll be I'll be buying like 13s, 12s, 11s, and then I'll just knock them out at 18 and 17, 18, da 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 da. And I went, oh, yeah, nice one, good stuff. Yeah, cheers, mate. Have a beer. Went off to speak to another trader who probably sits next to this other fella, and he goes, I love your levels. They're great. If you've got 10 in the Bund, then I'll wait for it to break, and I'll try and buy this sort of the sevens, it's the sevens and sixes and fives, and then knock them out at 13. And you're like, okay, fine. And that was almost another light bulb moment for me, which was like, they're not my levels, they're the market levels. They're the levels of the market previous price action is created.
Right.
And when we
You're
get
just
back
interpreting it.
right, and it's my job, it's our job not to sort of, we don't have to own them, we just have to report them, if you like. And then let people, especially the higher end professional traders that are most of my client base now, you just let them do what they want to do around that, and just and don't stress or worry too much about how or why it works for people. But different people interpret things in different ways.
Yeah, which is why they trust you for so long. They probably get inside your head, and they can really understand what you're saying and what to expect. So you mentioned earlier about, I don't think, do you still provide analysis on the Bund? Because that goes back to the days when you and I were both providing analysis to the prop houses.
Yeah, I mean, the business was 25 years old last month, and that is how long I've been getting up at 5 o'clock in the morning or 5:30 in the morning. And the first 3 pages I've written that entire time is Bund Bubble Chats, and still doing it now. Yeah, uh, it's a small part of my client base now from a point of view of percentage of turnover, but it's also, I mean, I've got clients using that report that have been with me from the start, so, or 20 years at least, various iterations of prop rooms and stuff. And so, I still provide that. And, they are still, and they're the markets. I mean, we know these markets like the back of our hand, don't we? We know it. And, still doing that.
So
That's for my news.
I'm personally very interested in how you moved from what we used to both cover, futures markets mainly, into energy. But before we get onto that, because I'm guessing someone came along and said, listen, we know how good you are at this and we want you to do that. You can tell me if that's the case later. But for people watching, they're going to want to know what technical analysis tools you use, what technical analysis techniques you have, because you've obviously got something that's worked consistently over 25 years.
I mean, it's a very levels-based approach that I use. In the bottom left-hand corner of my reports is a sort of is the 7 resistance, 7 support levels, and a thing I call the scuba, which is like a trend indicator, short-term trend indicator. I think that's the bit that most people will sort of eyes will go to immediately when they open one of my reports in the morning, and that's just very much what are the levels. The levels, they're based on mostly candlestick charts, but I overlay that with market profile as well. A market profile is a very different way of looking at the markets. There's a volume, a price, sort of histogram type of deal, that shows you where the bulk of the volume has gone through, or where very thin volume, where there's been hardly any volume. And those high volume and low volume levels can be a really nice overlay onto the candlestick work to sort of say whether the market is happy where it is, whether it's trading around value and just chopping around value, or whether it's actually trending and there's something more going on, kind of thing. So the market profile, which is a Chicago-based tool, it was introduced by a guy called Peter Stiedelmeyer, developed it in the 1980s. He was a soybean trader on CBOT, and that was his baby. And they're the main two things I use in combination with each other on various timeframes, from sort of 30-minute charts up to weekly charts. Yeah.
Okay, wow, really? So it really is very much price action focused approach.
Totally. And it's just about the levels we're in.
Yeah. And obviously trend following is key to what you do. Actually, market profile, I'll be honest with you, I tried to get into grips with it and I gave up. I couldn't get to grips with it. And I knew it was something that you do. So you must be very much an expert at that. And I know that you do coaching is a big part of what you do now, isn't it?
Not a big part, but I'm involved with the UK Society of Technical Analysts. I've sat on the board for about 10, 15, oh God, how long is it? At least 10 years over the years, on and off. I'm not actually, but all I'm actually doing now is something I've done for the last 20 years, which is I teach on their annual diploma course. And the main module I teach for them now is the market profile module, and the candlestick module as well. I mean, I tell you what, Jason, I bet you, let me just lean back here. I bet you that you tried. That's a hard bet. That's the book, Mind Over Markets. It used to have a yellow cover on the paperback version. I bet that's what you tried. That's what you used to try and get into. It's a tough read, that book.
Well, I admire you for mastering it, because it really was tough, and I admit I gave up.
I tell you what, I didn't master it by reading this book. This book has merits, but it is a tough read. I mastered it by sitting with traders who use it in Chicago, New York, and London, and all around Europe. Whenever I was, in a trading room with guys, clients and people, I said, do you use profile? How do you use it? Show me how you use it. Show me what you do. They all have different ways of using it as well. And so I'd sort of just collated all of that in my own brain and sort of come up with my own little sort of, way of using it. And actually, one of the things I find most effective is a thing called single print vacuums, which are areas on the profile where there's hardly any trade gone through. And you can find those on a 30-minute candlestick chart. There'll be breakout points on a 30-minute candlestick chart. So a single print vacuum, I don't know how deep we can get into this, but single print vacuum will look like on a 30-minute candlestick chart, it will be the only area that's traded certain levels during the course of that day. So let's say like 10 was support all day, and then when 10 broke, it went straight down to 95, and then it never went back to 10. It only got up to maybe 05. You've then got a single print vacuum, and if this is on a 30-minute chart, single print vacuum between 05 and 10, and you watch that 10 level in coming days, and when the market revisits it, quite often that'll be a high, or there'll be price action going on around that thing.
So it's almost like a gap fill.
Yeah, like a mini intraday gap kind of deal. But obviously, why is that an important level? Because it was the breakout. It was the moment where things changed, and that's, again, just comes back to price action. I mean, one of the classics as well, we're talking about volume a little bit here. we worked on the floor where, volume's not an accidental word, I think. We worked on the floor where if something suddenly started to happen, the volume of the place went up, didn't it?
True.
Yeah,
The
we'd all
sound,
be
the
yeah,
audio of the room. Yeah, true.
down Abundant, and suddenly up in the gilts and the short sterling, there'd be a load of noise that would be happening, and everyone would go, "Oh, what's happened? Is there must be a Bank of England rate cut or something?" And sure enough, you run down there, and that's exactly what's happening. The whole place is going mayhem, and the volume has gone up. And I think price action and volume are just the key to being able to understand the markets from a technical point of view, in my opinion.
I love that. That's a really good description. So you're seeing what you used to hear on the floor. You're seeing that in it's X's and zeros, isn't it, on the market profile? Is that right?
No, it's letters. There's a different letter for each half
Oh,
an hour period over the
okay,
day.
yeah.
Yeah.
So you're seeing it visually, and in your mind, you're probably thinking, okay, I can almost hear that as I look at it on your screen. So we need you to write now. You've written a book, and we need you to write another book then, because I need to learn market profile from you.
My publisher has been nagging me for years to write a book on market profile. I've started it about 4 times. I started with the title "Market Profile Made Simple," and then it isn't. It can't be. That's an impossible job. But I will. I think maybe next winter when the days draw in again here in the UK and I can't sit in the garden in the sunshine. Maybe I'll have to
Right.
get onto that.
You're
Yeah.
cracking on it. And on the subject of your books, tell us about the book that you have written. Is it one book that you've written so far?
Yeah, just the one candlestick. Yeah, look, here's one I made earlier. Candlestick charts, which is so. I mean, there's a textbook on candlesticks, which is the go-to. Behind here is my shelf for the most important books. Right, so we've seen 2 of them already. There's another one. That's Japanese Candlestick Charting Techniques by Steve Nissen.
I've read it several
That's
times.
the Bible
The
on
Bible,
candlesticks.
it is the Bible. Yeah.
This is cheaper and it's in color.
But I'm guessing that what you've done in your book, would I be right in saying that you just put in there what actually works for you consistently?
No, not really. It was sort of the publishers asked me to do a sort of a catch-all textbook. There's a few things in there where I'll talk about patterns, and there I go. I've never particularly found this one to work very well. I mean, there's a pattern called the Hanging Man, which sounds terrible, doesn't it? Sounds horrendous. But it doesn't. For me, it doesn't really work very well. And I've always sort of said, depending on the markets, some candlesticks work really well for some markets, not other markets. And it's only experience and or back testing are the only ways to really determine that.
So that's useful. You can save people wasting time working out which candles or patterns work and don't work. So I just want to explain to people who are watching, you and I both provided a service to the prop desks, and it was mostly futures, index futures and STIRS, short-term interest rate contract futures. And then I kind of moved into Forex. I went more retail and you went more corporate in the energy direction. I even remember, God, it must be nearly 20 years ago, you offering me a job to come and work for you. I wish I'd taken it now. You remember that? We were having a beer and you said, "Why do you want to come work with me? I've heard you getting into technical analysis." And I went and did it on my
I
own.
must have been drunk.
I've often thought we should have partnered because I really think we'd have been a good partnership. But anyway, we didn't. So tell me how you moved to the editing.
Well, I mean, so I started the business when Life closed to service traders who were leaving the life floor, knowing that they would be sitting in offices in front of screens going, "Oh, crikey, what now?" Like what? And because I was one of the levels guys on the floor, with a couple of other friends of ours, I sort of thought, well, let's do that then. And I did it, and it proved useful for 'em. Fast forward 5 years, the IPE floor was coming to an end, the petroleum exchange in London. And I thought, and I'd started writing about Brent crude and gas oil, which were the two main picks on the IPE. I started writing a daily report on that, and I gave it away to all the local traders on the IPE for nothing for 6 months. So they could just print it out and send it to their mates or show it around the floor or whatever. And then sure enough, the floor closed, and I got some clients for that. Fast forward another couple of years, and a broker, GFI, one of the big IBB brokers, said to me, I went in there one day and I bumped into Ben Prentice coming out of the lift. He went, "Oh, what, Clive, what are you doing?" And I said, "I'm going to see, but I can't remember his name, Ron Levy." And he went, "Oh, straight to the top then." I went, "Oh, is he? He's the boss, is he?" "Yeah." "Okay, well, I'm going to see him." And I went to see this guy, and we came up with this idea of doing a white label, basically. And their power and gas desks took on the reports and to send on to their clients. And so they were my biggest client for, I think it was about 10 years that we had that arrangement where I sent the reports to them with their badge on it and my badge on it, and then they sent it on to their clients. Then MiFID II came along, regulations to say, and part of the MiFID II regulations was that you had to put a financial value on research that you were that you were sending to clients. Client had to pay for research. And because of that, they cancelled the service. They said, we're not going to try and charge clients for this, we're going to cancel it. And the two guys that were running those two desks, one of which was an ex-Life guide, Jamie Clark, don't know if you remember Jamie, two really top chaps at that place. I'm sorry, I'm going on a bit now, but it's quite right myself. They sort of helped me in the ensuing couple of months to reach out to their client base. But now there's one of those catchphrases that I hate, reach out. But anyway, that's what I did. And they came to me, then signed up with me directly. And that was 3 or 4 within a month, 10 within the first year, and I've got about 90 now. All corporates, all traders, trading gas and carbon and things like that. Power, yeah. So that's how I ended up. That's the whole story. That's how I ended up with a business that's basically all to do with energy now.
I suppose you and I should try and give advice to some people who are struggling with technical analysis, because one thing I can agree with you is, I think technicals often lead fundamentals. I think you absolutely have to understand it. I've got people who follow me and they're absolutely desperate to, why did gold do this? Why did oil do that? And I'm like, listen, please, it doesn't really matter. Just focus on the price action. And you obviously agree with me on that. When you do courses, what do you teach? Do you teach people how to start technical analysis, or do you teach them the techniques that you use?
I've very much stuck to, what I know with respect to training and as already mentioned, right, with the analysis I put out, it's all pure technicals. I have been asked over the years to, can I train traders? And I think, and I've avoided that because well, maybe just because I'm a one-trick pony, right?
Right.
Uh,
There's nothing wrong with
but
that.
But being a trader is one of the most difficult jobs in the world because you've got to battle. You've got so many things so many pieces of the jigsaw that need to come together. And I think that psychology is a really important part. How you feel yourself, how you're feeling. I mean, technical analysis is a study of the psychology of the market. But if you're a trader, then it's you against the market, or if you like, you've really got to have your head together, and you've got to be able to sort of handle a lot of things that a lot of people don't really need to handle in everyday life. Fear and greed. It's all about fear and greed. Yeah, that's the old catchphrase we always roll out, isn't it? But it is, and I think managing your emotions is extremely difficult. Understanding money management and trade management is hugely important. Having a skew on the fundamentals, I think, can help. My clients are probably very much more fundamentally driven in how they're looking at the markets every day. But increasingly, I see people in this space saying, yeah, okay, yeah, it is all about the fundamentals, but we're going to use the technicals. We're going to use technical analysis to help us to confirm what the fundamentals are saying. And if they don't, we'll trade lesser size. And we're going to use the technicals to help us to finesse trade entry and exit with respect to just, if some of these guys are managing large portfolios of with flows in and out of gas on a minute by minute basis, and they may have to hedge the whole time against the TTF, the European gas benchmark, and they'll look at my analysis and go, okay, we need to buy 30 contracts of TTF right now, but the next support level is a little bit lower than here, or we if we wait off, we could potentially buy that a little bit lower and make a few more quid on this trade. They're hedging the whole time, but if you can increase the value of that hedge by finessing your entry and or exit, then that is that's the skill that they're developing, and that's where they get the value from the technical analysis.
Okay, interesting. So, any advice from your experiences with corporate traders that you could pass on to retail traders? Anything you can think of? I mean, one thing that springs to mind is retail traders are always saying to me, are the big guys out there stop hunting? Because, of course, retail traders hate getting stopped out. I don't think that's the case. Do you?
Absolutely not. No. And I think so that would be a bit of advice in itself. Stop being paranoid. Yeah, I think there are occasions, maybe in Forex and Asian sessions, on a Sunday night or something, where you might get a move that then whipsaw a few people out. You're asking me, is there any advice I'd give retail traders? It is I would say to look at your charts, look at a couple of different time frame charts that are suitable for what what you're doing, what you're trying to achieve.
So what time frames would you suggest, or what do you use, and what would you suggest?
If you're trading a liquid product, I personally tend to not go anything below 30-minute charts, but you can get good information on 10-minute charts if it's very liquid. If it's not so liquid, I think you've got 30-minute is the least, the smallest time frame we should be looking
Or
at.
reliable candles, or
In
reliable
some
patterns?
respects, the 30-minute chart for me fits in very nicely with the market profile stuff. They sort of go hand in hand, so that sort of makes sense from my point of view. But I mean, like, if you're investing rather than trading, then you want to be looking at daily, weekly, monthly charts. And this is a journey I've been on myself. I've had various stints of trading, and I've worked out actually in the end that I don't really like being a trader. I don't enjoy it. I don't enjoy the person I am when I'm trading, because I'm a bit of an emotional creature, I think, who gets a bit sort of like carried away, a bit hard at myself, and so I sort of came to a conclusion of a good few years ago that I don't want to trade. I don't like trading. And that's an interesting thing in itself, I think, maybe. It's not for everyone. That's something to realize possibly. And also work out what sort of a trader you are. There's some advice I'd say. I mean, we've both sat with thousands of traders over the years. Some traders we've sat with, and some people that we both know very well from since Adam was a cowboy, right? They're fantastic at range trading. They're really good at those days where the markets are quiet and they can just duck in and out and just make steady coin over the course of the day. That doesn't seem very glamorous. Trading's not meant to be glamorous. It's meant to be profitable. If they can make money by just finding a trade where you can just buy the ones and sell the twos, then that might not be very glamorous, but your P&L might add up to having a quite a nice lifestyle where you can say, I'm done by lunchtime, going down a golf course, right? Which is glamorous, or is a way to go, right?
People have to be honest with themselves. Are you trading for financial freedom, or to change your life, or independence, for income, or to build wealth, or are you trading for entertainment? Because I think you're right, it can be so entertaining, and then they lose track of what they're trying to do.
Remember a trader used to clear through a kite on the floor, no longer with us, bless him, Nick Rickards. He when we were on the old Royal Exchange floor, I remember him going home at 9 o'clock in the morning. You know, he's getting Anna and Sally to sort his cards out, get his trades cleared so he can go home because he's gonna go play golf for the day. And because he'd made his target for the day, and he was off to play golf. And I just always thought, and I've always still think, what a fantastic idea if, you know, if you like golf, right? And just have a target every day. Once you get there, right, I'm done.
I think it's important for you talked about the psychology of trading and how important it is. And I think that's one of the key things. Have a target. When you hit the target, stop trading. Otherwise, how are you ever going to be satisfied with what you're doing? Because the problem with trading is there is an unlimited amount of money on the table every single day. And because you know that, there isn't that in almost every other job. You go to work, you get paid, or even if you have a business, even if you have a restaurant or a shop, there's a limit to how much you're going to make. You can only sell a certain amount of goods or serve a certain amount of dinners. But with trading, you literally can make, unlimited amounts every day. And people get drawn to that. I had a trader who wanted to make X amount out of his money within 6 months. But the problem is that number was in his head every day. And he was just pushing himself to that number every day. Whereas with the guy you're talking about, I've got my target on the day. As soon as I've hit it, I'm out. And I can have a wonderful lifestyle trading. And he probably hit that target every day.
Yeah, yeah, exactly. But I think when you were just talking, then something else sort of came into my head, which is almost the opposite, which is and again, this is an answer to your question. What could we say to retail traders about pro traders? Is the market's always going to be there tomorrow. You don't need to have a position all the time. You have to spend some of the best trades are the ones you don't do, and putting huge amounts of patience and being able to just sort of look at a market, look at what's going on and go, "Mad, you know what? This isn't for me. I'm gonna leave this alone. I'm gonna wait until the market is either making more sense or trading the sort of conditions I like, or prices are sticking." Sometimes, you know, I put a report out in the morning and I look at it through the day and I go, absolutely none of my levels are stuck in this market today. And then I'll have a client email me and going, "What do you think?" I wouldn't bother listening to what I've got to say today because there's nothing sticking. It's not really working. Then maybe
Yeah.
use
You
something
wouldn't
else.
get paid like that.
No, patience is a huge thing, and it's very easy as a retail trader to sort of be thinking, "Oh yeah, it's moving. You've got to be on it. Got to be on every move." You haven't got to be on every move. You've got to be on. Yeah, you've got to really work hard on patience and having a process. And if your process says to you, "There is nothing to trade at the moment," then you sit on your bloody hands, right?
That's interesting. And you've worked with some very successful traders, and that's one of the key points that you've learned then.
Yeah, I mean, you know, it's the last book that I would say everyone should read is our old friend Market Wizards, right? I always literally whenever I do a training course, I say, "Who's read Market Wizards?" And I'm pleased to report that mostly when you ask that question, the managers in the room have. And the rest of them just look at each other and maybe one will put his hand up. And when the men and managers always put their hands up, I just go, "Yeah, see, that's why he's in charge of you guys, because he's well, shit, that's she's your boss because she's read
Yeah.
this."
Well, it's an opportunity to get inside the minds of some of the greatest traders that have existed.
Yeah, that and Reminiscences of a Stock Operator are classics that have got so many like really important sort of messages in there that can help you with your trading, I think, you know?
Okay, mate. So let's talk about what you can do to help people who are watching futures techs.
Well, I mean, I did have an FCA license up until a few years ago that allowed me to sell to retail, but I don't anymore, because I don't need it, and so I can only actually sell to professional traders and clients now, Yeah, I mean, there's plenty of resources on my website, which is futuretex.co.uk. And yeah, buy a copy of my book. I'm a few quid behind J.K. Rowling, I'm afraid. It's not. I don't think the book's ever going to make me rich, right? The other thing I'd say is the Society of Technical Analysts, the STA, and the website for that is technicalanalysts.com. That is a fantastic place for people with the society run monthly meetings. Some of them are online. We have the diploma course. We have a home study course. I say we. As I say, I'm not so involved in the society anymore, but I still sort of talk as if it's as if I am on the board. But I do. That was a huge part of my journey. I joined the society in 2002, took the diploma in 2003. So I was already writing daily analysis prior to joining this group. But I've met some amazing people, some really bright people, and it's been a huge part of my development as a technical analyst. And they welcome everyone from students, retail traders, professional technical analysts. It's a society for all, and that, I say, that would be my number one go-to piece of advice, if you like. If you've got a real interest in charts and technical analysis, then then that would be a good stopping point, I'd say, for sure.
Brilliant. Very helpful. Clive, been really nice to catch up with you. I don't see you often enough at all, so we should schedule a beer for some time. But there you have it, folks. Clive Lambert, 25 years in technical analysis. Do you think you're going to make it another 25 years?
Well,
I
I
think
mean, I thought, this is where you say, surely you can't have been doing it that long because you look so young still, Clive, But
you so do.
yeah,
We
we
both
both
do.
we've both done all right, actually, I reckon. You've
We've
always been a good-looking boy, though, mate.
yeah.
You've always.
Yeah. One, we're still breathing, and two, we're still paying the bills. So we've
Absolutely,
done
mate.
something right, and we're still in the
Well,
industry.
it's been a real pleasure to talk to you, mate. And
You too, Clive.
yeah, give me a shout when you're in London,
Hopefully
mate.
see you soon. Cheers.
All right. Cheers, dude.
Well, thanks so much to Clive Lambert for joining me today. It was a great catch up. I hope you enjoyed this week's podcast for the trading battle. Don't forget to tune in next week.